And as you might, I introduced myself earlier, emceeing the event. My name is Mike Butcher. I'm editor-at-large for TechCrunch. Thanks very much for coming, Jan. Now, is your mic? Let's get your microphone on.
Test.
Testing on. Excellent. So what we want to sort of unpack here a little bit is, what do startups need to know about the investment landscape, and what do investors look for in EdTech startups? One of the issues is applying. I think probably you get a lot of questions along this subject about I'm from work with TechCrunch. We're all about AI and blockchain and crazy stuff like that. So looking at the EdTech market is often quite a different space for us. Guys, sorry, just hit stop on that alarm. Just hit stop. It's me. It's my stupid phone. So what sort of things do you look for? What are the key propositions you look for in an EdTech startup?
And maybe just a bit of background on Emerge.
Yeah.
So we're London-based, small EdTech seed investor. We invest predominantly in European founders with ideas to address global markets. 50% of the companies we invest in are in the UK, another 25% in the rest of Europe, and then another 25% opportunistically investing around the world. We invest at seed stage, so our usual ticket is somewhere between 50 and 250K in sterling, so we go in extremely early. Over the last 5 years, we've done 54 investments. Companies we've backed include PyTop, which some of you may know, Aula, Bibliotech, and we really like backing companies that are addressing hairy, big problems in education, and where actually having a helping hand, getting in touch with decision makers in institutions, governments, etc., can make a massive difference to them, and that's what we try to focus on in terms of how we add value to our companies. But back to your question, Mike. So what are we looking for? So I think a useful way to think about the EdTech investment landscape is that traditionally VCs have shied away from this sector, and if you look at the amount of TechCrunch articles about EdTech, there's probably still a lackluster approach to that space, and I think the reason.
Why do you think that is, though?
Yeah, I think the reason for that is that traditionally it's been very difficult to build scalable, high-growth companies in education. So the big companies in education are like private school chains, publishers, big test prep companies, etc. They're often privately owned or private equity backed.
What changed in the last 5 years, say? Because I certainly, as a journalist, I've noticed a change a flip of about 2-3 years ago, when actually, frankly, EdTech companies had. Didn't seem to be able to get to that next level, and that something changed. What was it that changed?
Yeah, so I think just technology is fundamentally changing how easy it is to actually build companies that have the potential to achieve high growth in education. And I think part of it is, the first industries to fall to software were the easy ones, e-commerce, etc. And so that's been done.
Marketplaces.
Yeah, exactly. And so now it's like people are starting to innovate in some of the more difficult spaces, and we're seeing that across the board, whether it's mobility or health. Education is just one of those more difficult spaces. But on a fundamental level, I think things that have changed. Like traditionally, you would scale a company by providing content, localizing that content to all the different markets. Like every country's got a different curriculum, so it's very difficult to localize. And then you'd protect market share. You protect your business, your profitability through market share. And what's changed is that actually with technology, you now have pretty much every person on the planet connected to the web or through a mobile phone, and so you can reach them direct. You don't have to go institution by institution or government by government. We these companies are providing software platforms, not content. So much easier to localize, and often there isn't very much localization that has to happen at all. And these companies are using new business models. So there's network effects. They're using data and insights about their customers to grow. And
more like traditional startup business models.
Yeah, exactly.
And what about from an investment point of view? Because traditionally, EdTech space probably was more poor cousin in terms of VC investing. And has that changed again? And are you, how do you look at it from an investment point of view?
Yeah, so over the last 3 years, there's been more venture capital invested in EdTech than over the last 20.
That's a huge jump, isn't it?
Yeah, so the sector itself is really massively growing, but compared to other sectors, it's still a small cousin. And I think the other thing to say about that is that the majority of that investment really is happening in the US and in China. So they take 80-90% of global EdTech investment, and then everyone else is like far behind.
Exactly. And what markets in particular are you interested in? I mean, I think probably people might assume that it's some of the more sophisticated Western markets, but also emerging markets are coming up now.
Yeah, so I guess there's different ways to slice and dice markets. So geo is obviously one, and
geo
as in where is it
right.
is it sort of level 4 countries or level 3 and level 2 countries too? And innovation's happening everywhere, but as I say, the majority of investment is still happening in sort of the US and China. So the majority of companies that we back, and we have a particular strategy that is not something that most other people pursue. We usually back European founders that want to address most of the time the US market, sometimes China. And the reason we see an opportunity in that is because actually, while 25% of EdTech companies are founded in Europe, they receive 1% of the capital, and we think there's massive arbitrage opportunity.
Fantastic. We're joined by Bill Ningba, everyone, from Blue Elephant Capital, right at the end. Good round of applause for Bill. Poor chap, just coming. Now, is your microphone on? Do you want to switch it on?
Hello?
Yeah,
okay,
On.
everyone.
Fantastic. Thank you so much. I know everyone's, this is sort of the day when, just before the big conference sort of thing, so everyone's sort of coming in on their flights. We were just sort of talking about what investors really look for and why it is that EdTech has actually started to come up in the last couple of years. And Jan was just saying actually that the US and China are huge areas of focus at the moment. Obviously, Blue Elephant. Am I right in thinking you are the first VC in China to look specifically at the EdTech space? Could you use the microphone? Great. And so what attracted you to the space in the first place?
I entered the VC arena because I have been working in education for over 15 years. So I was, I take some benefits or advantages from Chinese education, and after that I spent about 5 years in New Oriental and 7 years in TEL, the two largest EdTech companies in the world, valued at about $20 billion US and $12 billion US in New York Stock Exchange. And then I left TEL because I was in the strategic investment department of TEL, and I found many opportunities for early staged EdTech companies. So we founded Blue Elephant Capital about 3 years ago.
And so what do you look for? I've already asked Jan what this question, but what do you look for when you're looking at an EdTech investment? What are key elements you're looking for from a startup?
I feel that TEL or New Oriental or VIP Kid, they have done a great job, but we still need a lot of EdTech innovations in China all in the world as well, because we still see that there are three kinds of needs in Chinese education. One is the consumption upgrade, which means that rich or affluent families or upper middle class families, they need better education, no matter online or offline. The second need is that for the education equivalence, because China is a very imbalanced country where the top cities like Beijing and Shanghai is international cities, and while the third tier or fourth tier of cities is like the third world. So EdTech, I feel, is the only way to solve this problem. And last one is the education biosystem, because we feel that we need media, we need talent solutions, and we need other kind of supply chain for the whole education industry. So we feel that EdTech innovations are the key factors to solve this problem. So we introduced the Y Combinator mode into China, and by far we have invested in 75 EdTech startups in China.
And now, Jan, we're in the sort of tech world, we're always trying to push the needle. AI, virtual reality, augmented reality, blockchain. How cutting edge does an EdTech startup have to be? Because, or can it really? Are there a lot of low-hanging fruit in the simple sort of app space, for instance?
Yeah, I think it's a brilliant question, and the reality is, as we were saying earlier, the space is still very nascent, and so there are lots of low-hanging fruit around just using the mobile format, for example, to reach customers directly, or to take the lessons we've learned from enterprise SaaS, software as a service companies in the enterprise space, and bring them to create operational efficiencies inside educational institutions and so on. So actually the first wave of sort of innovations in education technology were not about these new fundamental technology breakthroughs, but rather through, about creating new business models, and to just digitize a lot of processes and bring in workflow automation. So, a great example is a company called 2U, which is a US company helping universities diversify online, start offering courses online that in order to reach larger amounts of students, and also to drive operational efficiency and more profitability. And there, the innovation is in helping universities go digital, because they don't have the DNA to do that themselves, and B, it's in a business model innovation. So these guys operate on a rev share agreement with the universities, right? So they go and acquire the students, they deliver the courses online using the university's brand and content, and then they do a rev share with the university. And that's opened a massive market which is growing very fast, and which is not about these fundamental technologies. That said, I think there's a bunch of really interesting applications and opportunities for these, and I think China and Chinese companies are actually a great leader in that. So maybe Bill, you want to take that part of it.
I love it when panelists take over and then I don't have to do any work. Funnily enough, I was going to ask that question. I mean, what are some sort of leading examples of EdTech in China that you think are really fascinating at the moment? I presume you might have mentioned some of your portfolio.
It's not in my portfolio. China has a very unique market in the to-consumer market, which means that parents are willing to pay an extravagant amount of money on education for their kids. So that's why New Oriental and TEL are the leading training companies, education training companies on this planet. But it feels that in the last, New Oriental was founded in 1993, and TEL was founded on 2003. And in the year 2013, a new company called VIP Kid. You all have ever heard that probably. It represents the online live streaming of classes between US teachers or Australian teachers to Chinese kids. So I feel that in the last 5 years, this is one of the innovation change to Chinese EdTech arena. We have seen the online one-on-one English and one to small class English and one to a large audience English. And now they are trying to use artificial intelligence to resemble the real teacher, which means that with fewer teachers, you can get equivalent results. And the subjects has expanded from English to other major other subjects like Chinese, like math, and the STEAM classes, and even some kind of PE classes are trying to get online. So I feel that online class was the largest trend in the last 5 years, and we seem pretty successful.
So virtual learning.
Virtual learning. Yeah. It's a online live stream between teachers and students.
That's a good question. Good question. Because how much of this is just going to go virtual, Jan? I mean, what's the split? What do you think is the split going to be between in-class, real-world, but using tech, say, on tablets, versus just things, frankly, just becoming fully remote, and virtual, and less real-world, shall we say, and institutionalized? What do you think is the kind of split, or is it going to sort of be a gradual change, Jan?
Yeah, so I think the first thing to understand is that the more complex the topic or the more complex the learner's needs, the more face-to-face intervention is valuable, and so a lot of this digital stuff is useful for an entry-level sort of introduction to a topic, but actually the real power comes from enabling teachers in classroom to be more effective. So just to give a small example, we've just backed a company called TaylorEd, which we co-invested in with Y Combinator, who use machine learning approaches to understand the levels at which students are performing and their different learning preferences, the context in which they learn, and then they group those students dynamically to provide teachers with lesson plans for each group that give them the ability to provide differentiated instruction, i.e. different learning strategies for different types of groups, and grouping these groups dynamically. That enables a teacher to do what they're taught to do, which is to use differentiated instruction for different students, but which in practice they find just impossible to deliver because the amount of time required to plan lessons like that is just not viable. And so I think that's sort of the first really important wave of innovation that needs to happen, is to enable stuff that is happening in the real world to become more efficient. And then there are interesting also companies that are helping bring some of the stuff online. So, in order to teach, you need to be certified. But what we've seen in a lot of other markets is that sort of where there's a barrier to trade through certification, online marketplaces have come in that have established trust between suppliers and users. And have enabled new markets to be created. So Uber is the obvious example, where suddenly you're in a stranger's car and you trust them to take you somewhere. And there's new models like OutSchool in the US, which are hosting online classes with just teachers from around the country that homeschooling parents are using to deliver really high quality educational provision to their kids. And that's not necessarily going through sort of the traditional system. So I think there's a long way to go to bring stuff online. There's definitely opportunities there.
Fantastic. Let's now do some Q&A. We've got about 3 minutes of Q&A. If anyone would like to ask a question on the investment side, we have some roving mics. We'll just get those because we'd like to keep the audio for the video later, which is going to be cut. If you put your hand up if you've got a question. Let's go this row here. First of all, if you could just stand up, sir, just there. Right, go ahead, just stand up. You can say who you are and which company you're with, and then just, yeah, ask a question. No statements, go for it.
Hello, everyone.
Yeah.
My name is Paul Lowell. I'm co-founder of Scholar X. My question is fairly simple. EdTech is synonymous with evidence. EdTech is synonymous with evidence-based. In making your investment decision, how much does that play a role in, oh, has this thing worked? Is it being tested and it works, and what kind of traction have you gotten? Or you simply will act on ideas in some cases?
Almost not at all.
Thank you.
So do you want to take more questions? Or
Yeah, we'll take more questions. By the way, just a quick, if you're, hello, roving mic person, right? Stay near the person asking the question so you can grab the mic back off them. Okay, go ahead, sir.
Hi, I'm Pablo Fetter, founder and CEO of CLU. Venture capital. Traditionally, the success rate in venture capital is, well, they say, you know, you have, if you invest in 10 companies, 5 are going to fail, outright fail, go bankrupt, and then you're going to have, you know, if you do a good work, a great success with 1 or 2. Now, I think I heard that you invested in 60 or 70 companies. What kind of success rate do you expect?
That's a good question. We have invested in 75, and more than 90% of them are still working quite well. That's because the high demand of education supply chain, which means that both parents or students or schools need better quality education product or information system for the schools. They need higher, they need very much, and they need higher. So as for EdTech companies, as long as you are doing well in your product quality, you'll find your market.
Questions? Put your hand up, keep going.
And also that we are located in Beijing, and we have our limited partners are all from listed companies, like top listed companies in China, about 10 of them, and a lot of our limited partners are also education entrepreneurs. So they not only support their money, they have their time and expertise for those EdTech entrepreneurs, which means that we got the very best of that stage EdTech companies, which give, the result is that 90% of our portfolio companies survives, and 60% of them got the next round of financing, and 30% of them got a higher value, get a valuation of more than $50 million US, and maybe about 10% of them get maybe 50 million US dollars. This is all because the huge Chinese markets, and all because the hot VCs in China, because they have to fund arenas like education when the pure EdTech and the pure technology and investment does not get much progress. So we did have a very high successful rate.
Now some more questions. Put your hand up if you have a question. There was one over there on that side as well. Okay, so you've got a microphone. Go ahead, sir.
Yes, good morning. Alan Greenberg. I'm with Wise Nose, and I have an interest in a portfolio of both education and healthcare. I'm curious to ask, well, Jan, I know, but I'm curious to ask both of you, what is the investment in the individual rather than the technology? And in terms of your experience, how do you see companies pivoting and changing over time to fit the market opportunity, given your interest in early stage investment?
So when we look at investments, companies usually have the beginnings of a product, but there's very little traction. And so going back to the gentleman's earlier question, that's why there isn't any evidence to look at when we evaluate companies. So really, the only two things that matter to us are, how big is this market, is this just a huge addressable opportunity, and have they identified a really burning need that people urgently want to have solved? And the second one is this a team that can really deliver? So we look at various different factors. We like investing in people that are slightly delusional and who you might not want to hang out with socially, but who just end up making great entrepreneurs. And the majority of EdTech companies end up changing their model in some way or another, and so you're never investing in the exact model that you're seeing, but you're investing in the people and the overall opportunity that they're addressing, of course.
Another question at the front there. Do you want to stand up?
Yes, I probably need to stand up because I'm so short. I'm Violet Slow from Inclusive Business Lab. Thank you for the presentation. Probably my question is coming in very differently. Thanks for the insight about the education in China. Absolutely, some of the big cities like Beijing, Shanghai, or even Chengdu coming up now, and Guangzhou actually have a lot more resource than other third-tier or even fourth-tier city. The more to the west, the more need with the education technology, I think. We come from very different approach. We didn't start with money, although I work in the investment bank for 13 years. We see there's a need about the quality of the content. And personally, I'm very hesitant in working with people like yourself, thinking about money. We have the program already growing, really amazing, so quickly that the whole city to city, city to country. And really where we're coming from is bringing the best from the world to reach out to all. That's why from the very beginning, we didn't really want to take money. We had parents want to pay us. We didn't take the money. We have government even think about it. They become volunteer. So now, we all here is about the education. And I'm very conscious about how people turning education become money-making machine. How do you see that? Like, education technology is important to scale up. That is why we are in the position. There have been a lot of technology partners coming to us because they're looking for content. Some of the companies that you're working with, or you mentioned that has been doing successfully, but also we did research that are also a lot of criticism about their content, the quality. We are in the position, we have the quality, and I'm hesitant to partner with any technology company that for the scale up. How could we have this balance? We stay with having the integrity, what we want for the education, the impact for the young people, the development, while we can be sustainable to reach out to all.
Right.
Back to you.
Great question.
I feel that capital is a neutral word. Because when you use the capital in the right way, you got good results. Because, like Stanford, like Harvard, they all got great money, so they can provide good services for their kids. So nobody blame Stanford or blame Oxford for having donations or having money. So I feel that from my perspective, capital is a neutral word. And the second thing is that you have to make a profitable business to attract very good talent. Otherwise, I do not believe that you can get good talents to make high quality educational products. We see all kinds of Hollywood movies. They all have very high paid producers, actors, or technicians, or something. So I feel that with capital, and you can hire the top talents in making education contents. And still another thing is that I feel that technology is the only way to balance the inequality of education from cities to cities, from countries to countries. Because in general, technology make the good contents cheaper instead of more expensive. So I feel that capital does do some good things in education.
Sorry, I just respond this very quickly because you quote the example Stanford and Harvard. These are reaching out to those who can pay the fee. How can we actually bring the education to reach out to all the quality education?
Yeah, how do we democratize it? Jan, do you have some thoughts on that?
Sure. I mean, so the way we think about it is like if you want to make an impact in education quickly, you need to grow at incredible rates and reach incredible scale. And the only way to do that is to be venture backed, or you know, that's at least a very good path. In order to be venture backed, you need to have a credible proposition that you know that is comparable to investing in like a scooter company to a VC who needs to create returns for their LPs. And you know, we believe that by investing in companies that operate in the education space and that are creating real solutions for people that are on the front lines, you know, we're backing things that are creating a positive impact in the world. You know, a lot of technology companies in education are about bringing affordable, high-quality education products to a much larger group of customers, and are creating the sort of impact that you're talking about. So, you know, a good example here, just to make it a bit more specific. We backed a company called Lingumi. They provide English language training to 2 to 5 year olds. You know, the reason that matters is because, you know, if you speak English, you earn more money. So lots of parents around the world want to teach their kids English, but the reality is that most of that teaching starts at the age of 6 when they get to school. And the best language learners in the world are like below the age of 6. So how can you bring affordable English education to those kids when currently the only solutions available are getting a private tutor, which most people can't afford? So Lingumi, as just the specific example, is about helping turn the parents into home educators, even if they don't speak the language themselves, using this application and the content, and making that super affordable. And you know, I think that's just not possible without technology.
Absolutely. Let's make this the okay, second to last final. Go ahead.
Hi, good morning to everyone. I'm Alonso from Syllabus. So I have 2 questions. They're going to be really quick, just don't worry. The first one is, do you as investors feel that there's kind of like a bias to markets that are like kind of like bigger, of maybe Europe or like Asia, in front, like for example, when Latin American startup pitches, like their traction may be good for Latin America, but if you compare their numbers to like an Asian startup with the same age, numbers may be huge in the other markets. So do you think that there's a bias there? And that's the first question. And the second one is like, for EdTech startup that has a B2B model, I've heard a lot, I'm Latin American, that they are not scalable. So what do you think about that? Thanks.
Scalable.
Okay. Okay. Venture capital is a relatively new thing. It started in 1950 in Silicon Valley. It's all because that good technologies are expensive. They have to pay in advance to make some new things out and then sell it around the world. So venture capital tend to be technology driven and tend to get bigger markets like the Europe, like US, like China and Northeast Asia and India, countries like that. But as for I do not know much about South America, because I've only been to Mexico. It's not that South America, right? So I feel that venture capital tend to pursue bigger markets. That's a fact. And after they have conquered the big markets, and they can find other relatively small markets. And I feel that it's a fact.
And there's a question there.
Yes, David Berg from Emblaze in the United States. It's hard to talk about reform and innovation in education without talking about the bureaucracy of education and governments in our countries. I wonder, from you all being at the very cutting edge, if you think about Airbnb, for instance, as a company that goes out, innovates, and the governments have to adjust and adapt. So I'm wondering what thoughts you have around the future of how schools look, like actual what the four walls of schools look like in 10 years, and what governments need to do to catch up. Thank you.
So we've seen a bunch of people try to innovate the school model, and for that matter, the university model, and I think have just found it extremely difficult to innovate within government constraints. And so, on a personal level, I think that sort of innovation will come from, unfortunately, extremely well-funded private players, big fee-paying institutions that are just financially able to experiment with new formats because they're not necessarily as bound to these rules because that's not where they're getting their capital from. And then we'll see, hopefully, innovation spill over. So, one good example of this is the London Interdisciplinary School, which is a company we backed a year ago. They're a privately funded for-profit university in London, which are bringing a completely new educational model to the UK. It's pretty well known in Finland, but in the UK this is radical. Basically, students that go to this university will not study subjects, but they'll study problems, and they'll learn the most important mental models from all the different disciplines that matter to those problems and learn how to apply them. They'll spend a third of their university education actually with employers working on these specific problems in highly curated internship opportunities that are paid. So actually a third of their student fees are paid for by the employers. This sort of thing is highly relevant. It's what the market is looking for. There's a big push from students and there's a big pull from employers for this sort of thing. But this could never happen if it weren't a private institution.
Fantastic. Well, that brings a conclusion to our panel. Please thank our panelists. Thank you.